Hello there, welcome to the Week Ahead show as we enter the middle of August, which traditionally is quieter for the markets. But it was around this time last year that the global stock markets experienced one of the sharpest sell-offs since the financial crisis. That was after China's central bank engineered a surprise 2% devaluation of the yuan. Now, this proves that anything can happen in the trading world, and being on guard at all times is an absolute must. Now, next week is dominated by UK data, which will give us more of an idea of how the EU referendum result is reshaping the British economy. Australia will unveil meeting minutes, and the US will also unleash their FOMC meeting minutes too. Added to that, there's crucial home building news and mining stocks too. Let's have a look at the diary. So on Monday, as you can see, Japan data there with the GDP, and it's a bank holiday in Italy. On Tuesday, again, we have Japan with the RBA meeting minutes, UK stats that we're going to analyse in just a moment, US building permits, we've got CPI stats too, and industrial production. Midweek, we have a look at the US meeting minutes. Again, we'll have a discussion on that in a moment. Unemployment data coming out from the UK. For the US, we've got more manufacturing data and those oil numbers. On Thursday, we have the trade balance coming out of Japan. We've got unemployment from Australia, unemployment from France, retail sales from the UK, CPI from Europe. And for the US, we're going to be looking at the Fed index and also jobless claims too. On Friday, Germany CPI, UK CBI and Canada CPI. OK, let's have a look at some of those now. We're going to start with the UK data because, as I mentioned, it's quite heavy next week. We've got Josh Mahoney here who's going to help us analyse all of that. So there's plenty coming out, isn't there? And actually, at the moment, this is really a full month showing us post-Brexit as to what is happening. And we're all on edge.
Yeah, exactly. I mean, finally, we actually get a handful of data that actually means something. You know, of course, we knew that in the lead up to the referendum that people were sort of holding off in terms of their investment decisions. We know that. We don't necessarily know how people have reacted post-Brexit. So it's going to be very interesting to see exactly what happens. Of course, likes of the CPI are always interesting anyway. They have a big sort of impact on what the Bank of England are thinking. We are expecting that to remain as is. But certainly looking forward, it's going to be a very interesting week for the UK. It's going to be very interesting to see what happens in terms of the jobs front. I wouldn't necessarily expect companies to stop hiring, continue or lay off people. You might actually see them easing off in terms of their hiring. But certainly you would think that we'd see some big volatility for the pound, which we've been seeing head lower so far this week already. So if we look in terms of the chart, this is cable. We can see on the daily time frame that we've broken below this 13059. That essentially provides a neckline of a double top formation, typically better found at tops or bottoms of markets, but essentially what it's saying is that rally seems to be over and it is moving back onto a downward trajectory. Certainly sort of oversold if you're a fan of the stochastics and alike, so there is a potential for some sort of bounce, but nevertheless, if we look at the shorter term, so if we look at the 4 hour, you can see that we have been largely sort of grinding lower, and the expectation is that any rally is likely to be sold into. So your next major point of resistance is around about 131. As long as we don't break up above there, it's likely we're just going to see a continuation lower for this pair.
Sterling is the worst performing currency this year officially now.
How depressing.
I know.
Just
who would have thought?
Season.
Yeah, absolutely. Yeah. Let's talk about Australia then, because it's the meeting minutes. As we know, we now have an interest rate at a record low of 1.5%. So presumably we'll get more commentary coming out from that and the way forward.
Yeah, exactly. I mean, look, their problem is inflation, which certainly isn't new to us because we've seen it everywhere, the sort of disinflation problem. They actually, prior to releasing their decision, they actually saw a tick upwards in inflation, but it didn't really make that much of a dent because ultimately it made them ease. The question is how much further would they be willing to ease in the future? How do they currently see things panning out? Are they going to leave it for quite a while and see how that plays out, which is probably going to be the case? Their other issue is growth. Now, I don't necessarily think that it's necessarily going to be as much of an issue as the inflation one in terms of their decision-making going forward. So it's going to be interesting to see exactly what they're saying, what their sort of thoughts were around that decision and what would spark them into doing it once more. In terms of the Australian dollar, this is a really interesting one because, of course, like we said, we did see them ease. And when you see easing, you expect to see devaluation of your currency. Now, what has been happening is just consistent gains for the Australian dollar. Now this is the weekly time frame, which is actually a really, really important chart to be looking at right now. And as me and Chris always joke, when you have a good trend line, we always jump with glee and say, I've done a line. And I've done a serious line right here. You can see here, this line is absolutely massive. It dates back to 2013, and time again, it comes to this level and reverses. Now what's happened? It's come to this level this week, and now it started weakening. And if we look on the daily time frame, it puts in a little bit more sort of stark contrast. The fact that as soon as we saw it try and punch through that, it failed, started turning lower. We can see the stochastics now back up over that 80 mark and turning lower. So this is starting to look really bearish actually, and it plays into the sort of wider context of it is a currency which should be weakening off the back of the idea that not only did they just ease, but they might do so again in the future, because currently we have still got this sort of disinflation problem. We still have got issues in terms of growth and employment, and we're going to see the employment data this week. So this is really set up for a week where we could see a serious deterioration in terms of the Australian dollar.
Okay, so that is a long line for you right there. But we're now going to do something completely different, because the US, well, they chose not to do anything, and that's despite having, well, painting a rosier picture of the economy.
Yeah, exactly. I mean, look, the issue with this is that we're looking at FOMC minutes, which of course are always a big thing. But I thought it was a little bit of a non-event. They sort of trim back the odd sort of detail from their statement and the like. And I guess, you know, it's down to what you think your perception is of how much they really want to raise rates. You know, a lot of people now are saying we might see a rate rise in December. I do think they want to try and do one.
Now that they've after the election, then obviously.
Yeah, I mean that would be important as well. And then of course that's going to be influenced by the result. But look, I do think they do want to do one. The fact of the matter is that they've wanted to do it for some time now, and they've held off pretty much throughout the whole year, and there always seems to be another hurdle in the way. They've now just got rid of this whole statement talking about sort of global headwinds, and so seemingly they're not too worried about the Brexit issue. That has sort of paved the way for this massive rally that we've been seeing in terms of the stock markets. But actually, one thing I wanted to point out, which is this is on the S&P 500, is this is the weekly time frame. And certainly, you know, people always get very excited when they see sort of new highs created, and when you see it break through a major resistance level, you think that we're going to see this big runaway. But it's very different. If you're seeing a sort of new high set of this kind of ilk, it's quite different from one that's coming from quite a low base. This is obviously a very overextended market that's been rallying for multiple years. And if you look on that weekly time frame, we did see that marginal pullback, but certainly, you know, where's the conviction? You know, try and find any part within this chart which spans 2 years where we have as little volatility as we have had over the last 4 weeks, and you won't find it. And that just shows that there's very little conviction at the moment. It's probably a lot to do with the fact that people are away on holidays, and there's, you know, less volumes, and we might be seeing less volatility because of that. But ultimately, I don't think there's a conviction, and for that reason, I wouldn't necessarily want to be long of this market right now. Certainly, we are seeing the markets continue to grind higher, so I wouldn't be short right away. I'm certainly open-minded about the idea that we might start seeing some sort of reversal signs. You can see here, we are seeing gains, but they're very marginal. And when you see these headlines talking about new all-time highs and the like, generally it might only jump up a few points over that previous high and then start selling off. We haven't really seen it break high with any sort of convincing manner, and that makes me think that we could start to see this reverse. So this can be an interesting one to look out for. 2150 is a really interesting one. If we break below there, we've got a double top formation, and then we can break back into the previous highs. So S&P 500, believe the headlines and you think it's going to go higher and higher and higher, but if you start looking at the chart, it doesn't look that great.
But it can only go higher for so long.
Well, yeah, but we said that for years, I guess, didn't we?
Well, let's move on. Cynics we are here. Let's move on and talk about corporate news, because although it's a quieter week, there's still plenty going on. And actually, I mentioned those home builders earlier. We've got Bovis Homes on the list for you. Now, this one's really interesting because it had a terrible day after the EU referendum decision. It's a FTSE 250 listed company. It will report its half-year results, and well, it was down about 40% the day after, so it is rather embattled. We will discuss that in a moment. VTB Bank as well. I've done many reports outside of that building over the years, I tell you. Let's move on and talk about Tuesday. We've got it here. There we are. Home Depot as well on the list. BHP Billiton. It's a big week for those miners as well, because you've also got Antofagasta on the list as well, and Wood Group. On Wednesday, in the middle of the week, it gets a little bit busier for you. You've got Lookers on the list just there. Carlsberg as well. It's a popular time of year for that particular drink. You've got the beer gardens as well. And we are expecting a heat wave this weekend. So yes, in demand. Imperial Brands too. It's a huge conglomerate. We've also got Nestle as well there. Very popular for their chocolate. Walmart stores as well. We are going to discuss that one in big detail because lots of excitement surrounding that particular company. Premier Oil, obviously the price of oil very much in the spotlight. Once again, we've got an OPEC meeting, an informal one though, coming up in September. Kingfisher there, Brambles as well, Applied Materials there. On Friday, finishing up the week, it's a little bit quieter. Estée Lauder there with the Brucey products and everything in between there with Foot Locker as well. Okay, we've got a lot to talk about here because, as I mentioned there, we've got the home builder. Let's concentrate on the Bovis one then, shall we, Josh? As I mentioned, the day after the referendum, had a terrible, terrible time of it. They posted some rather positive numbers, though, in July, at least more positive than we were expecting them. But then presumably Brexit had nothing to do with those figures anyway.
Yeah, I mean, it's difficult to know exactly what's going to happen to the housing market. And, of course, this is going to be intertwined with the sort of fate of how the housing market goes. We have got a company here that's heavily exposed to London in particular, and you would think that London actually is the one area that's probably had more international investment than anywhere else, and they might start pulling out, or the sort of demand might dry up. Nevertheless, we haven't necessarily seen that much. It's going to be interesting to see that we've got the sort of house price index from Rightmove on Monday. We've got the ONS one on Tuesday. The Monday one is for August. The Tuesday one is for July. So that should give us some sort of idea of what sort of direction the market's moving in terms of house prices. But, you know, we did see that trading statement from them. It was largely positive. They said demand was still there. They cited the fact that, you know, at these low interest rates, you have actually got very affordable mortgages, and that continues to drive demand. From what I've seen and from what I've heard from people in London, so far everyone just sees it as a positive. Anytime the prices go down, people just want to buy. So I wouldn't say...
People have been complaining about the high prices.
Exactly, people are happy as, yeah. And you know, quite honestly, I'm interested to buy as well, because the further it goes down, it's one of those markets where, you know, it has proven throughout the years to be very robust. And I don't think that necessarily, even if we went through 1 year or 2 years of a bad time in London, London will always bounce back, you know, and so it's a good investment. If we're looking at the share price itself, you can see, of course, the sort of repercussions to that referendum vote, and you saw these massive, long, lower shadows. But really, it's important to see that we have got these long, lower shadows. They haven't sustained those losses. Certainly, we are substantially lower than we were pre-referendum. But we have been gaining ground quite consistently since, and if we look on the daily time frame, we can see that we have been somewhat grinding higher. The next major resistance level you want to be looking at is around about 864, but ultimately, you know, I think that, you know, for the last couple of weeks, 3 weeks, we've been seeing pretty decent upward trajectory. Of course, earnings can move it in either directions. But in the lead up to that, I think this is looking fairly bullish, and we've just got to see exactly how their numbers are. We've got to look out for those house price index as well to see exactly how things are going to play out. But certainly, I think people are actually in the same way that they are with the housing market and thinking, actually, it could be cheap. People are probably seeing the same kind of thing in terms of the home builders.
And there's more affordable mortgages now.
Exactly.
And according to the company, good land supply as well, and cross-party political support for building more homes in the UK, so it all
There's
helps.
Definitely that, yeah. Yeah,
let's move on and talk about BHP Billiton then, because what a nightmare for this one. Also, more talk about more taxes imposed for this particular sector too. It's a toughie, isn't it, for the mining sector, but is it getting better slowly?
You would think so. So they're massively reliant on iron ore, and steel demand supposedly is improving. I'm not out there, I'm not asking for steel, but apparently it's improving. That means that you're going to see further upward trajectory, and people are expecting further price increases in terms of iron ore. Iron ore, they are so overly reliant on it that 34% of their revenues, I think it was 34% of their revenues are down to it, but 144% of their group earnings are down to it, which is because of the fact that their petroleum and their coal business are both massively loss-making. So basically, if they didn't have the iron ore business doing well, then it'd be doing pretty awful in itself. So, certainly I don't think the numbers are going to be great when you're looking on a year-on-year basis. It's not going to be looking particularly pretty. But going forward, how do they see things? Do they think the market's really going to pick up? If you see on a weekly time frame, we have been seeing a pretty nice trend coming in play since the turn of the year. You can see that we have been rebounding quite strongly. We've got this big resistance level that has been breaking through here around about 10.30 that it's tried to break through this week. Hasn't necessarily sustained it, but that also means that we've come back to potentially retest that as newfound support. So you can see right now we're right back at that 10.30. The trend is your friend, and it has lasted for all of 5-6 months at the moment. So I wouldn't necessarily say that I'm bearish at the moment. I would say that any retracements, as long as it doesn't break below this £9 mark, I would say retracements are likely to be bought into. Of course, like I said, earnings season. Earnings have the potential to really move it sharply in either direction. But I think even if we did see pretty poor numbers, that's somewhat expected, and people are now starting to revise their expectations for iron ore, which should have a big difference in terms of the company going forward.
All right, let's switch gears and talk about something entirely different. Let's do Walmart, because they have announced the acquisition of Jet.com. That's going to be moving forward at a cost of $3 billion in cash and $300 million worth of Walmart shares. This is really exciting because the whole point of this is that they want to rival Amazon, don't they?
It is, yeah. I mean, I've got to admit, I didn't know the website. I thought it was I thought it was like something to order flights.
Me too.
So I was thinking, okay, they're going a little bit left of field, but certainly this makes sense because actually, if you look at their revenues, their sales, they make more in sales than Amazon, so they're absolutely massive, right? But the fact of the matter is that only 2.5% of their sales actually come from their online business. So they're not particularly good at doing it online. So if they want to try and rival Amazon, then arguably they have got a great basis to do so. They've got the products, they've got the consumer base, they've got everyone basically knowing what they're about because they're very cheap. And certainly, when you go in there, you think you're going to be able to get things at a good price, which is the same kind of proposition that you get with Amazon, I would say. So the fact that they're now sort of tying up with Jet.com, that's going to be really important. Ultimately, earnings, well, these aren't going to reflect that. And, it's going to take some time for that to be reflected. Certainly, the share price is going to reflect the optimism of that deal. But in terms of the earnings itself, it's more going to be about how's the economy doing, how's sort of retail sales and consumer buying doing. And the economy is doing relatively well out there at the moment. So you'd think that they should be holding up quite well. But, when you do have this sort of good news story for the future and this optimism behind the scenes, even if you did see a sort of underperformance in terms of figures, often people will see that as an opportunity to buy in. That being said, if we look in terms of the weekly chart, you can see that we've got this big rally coming into play since the lows back in November 2015. But we have come into this big area of resistance. You can see we've got this inside trend line, previous support turned into resistance. And this is the third touch this week that we've found resistance on this level. We've also got this simple moving average there as well, the 200 week. So there is the potential for some downside given the fact that we've got this major resistance, but ultimately it's just a hurdle to get through ultimately, and markets have to get through hurdles and support levels as well. So I guess this would be a key level to be looking out for, around about $75. If it can break through $75, and that earnings release could do that, then we could be set for a strong continuation and another strong couple of months for Walmart. So certainly, it's been a good news story since the back end of last year. And if we get good earnings, given the fact that we've got this Jet.com deal in the offing, it looks like we could actually see further upside if we manage to break through that $75 mark.
All right, Josh Mahoney, thank you. That's it from us as we wrap up a week of highs. We're going to see you on Monday for the market open at 7:30 a.m. And if you're celebrating Assumption Day, which is most of Europe, then enjoy that, and we'll see you on Tuesday. Goodbye.